Carissa Chappelle, and welcome to the monthly quick study report of the REIT market with NAREIT's Brad Case. Thanks for joining us, Brad. So how would you describe REIT performance in January overall?
Oh, it was very strong. The REIT market returned just a little bit more than 4.25% during just the month of January. That's actually a little bit less than the performance of the broad stock market. And you're going to have months in which REITs outperform the rest of the stock market, other months in which they underperform, but I doubt that any investors are going to be complaining that their underperformance made them richer by 4.25% in 1 month.
How would you say this January compares to January 2012?
Oh, it's interesting. January 2012 was actually even a little bit stronger, better than 6% performance in the REIT market. Investors may be aware of something called the January effect, and typically there is overperformance in the month of January. For various reasons, including how investors treat the end of the year. They may sell stocks in which they have a capital loss for tax reasons. But what we've seen generally is that REITs have performed well in December as well, both in December 2012 and a year earlier in December 2011. So it's not as though the January effect is making up for lost ground in December. There's an old saying that what happens in January predicts the rest of the year, and I don't know about the truth of that. But certainly there's a lot of reason for REIT investors to be optimistic about not just the rest of 2013, but several years going forward. We're still in the early phases of what is, generally speaking, a long real estate market cycle.
So with that performance, do REITs still have a strong dividend yield?
Oh, they sure do. The average dividend yield among the equity REITs part of the market, which is the biggest part of the REIT industry, is still 3.6%. Still very strong compared to other assets. In the mortgage REIT part of the market, it's even stronger than that. It's better than 11.6%. And that's even though mortgage REITs actually outperformed dramatically during the month of January and have outperformed fairly dramatically in the recent past. So even though performance has been strong in the REIT market in general and in the mortgage REIT part of the market in particular, REIT dividend yields are still extraordinarily strong.
How about when it comes to sectors? Which sectors have been the strongest performers? And do you expect them to continue to outperform?
Yeah, well, I think those two questions are actually closely related because outperformance during January was really, there were several sectors that really outperformed. And I attribute that to the fact that the performance of the REIT market is not about individual property types. It's about, first of all, the improvement in the economy that is likely to continue to improve rent growth and occupancy levels in all property types going forward for as long as the economic recovery continues, which I expect to be a long time. And then the other driver of outperformance is the fact that REITs have such good access to capital and are able to use that to make good acquisitions. And that, again, is something that's across the board. If you look at the individual sectors that performed especially well, industrial REITs performed especially well during January, lodging REITs, self-storage REITs, timber REITs. Now, timber REITs, that story has been there for several months now as we see improvement in construction, including residential construction. But the other parts of the REIT market that are performing especially well, I think that has a lot to do with the general economic recovery.
Thanks for joining us, Brad. I'm Carissa Chappelle for REIT.com.